to the end of the week of 21st of October. Let's look at the global stock indices, starting with the Dow Jones average. Now, the Dow Jones average bounced off the long-term support line over here, okay, for the past few weeks. But as you can see, the volume hasn't been very fantastic, which suggests that this is probably just a technical rebound instead of a bullish momentum of the support. So be agile and see and be prepared to change position once there's a potential sign of bearish continuation. Next, let's look at the Nasdaq Composite. Now, the Nasdaq Composite appears to be pretty similar with the Dow Jones Industrial Average, okay, with a technical rebound of the support line over here at the 13 at about 10,550. Now, and again the same thing. If you look at the rebound, okay, of the support line, the volume is pretty high over here, but after that the volume has pretty much tapered down. So if you look at this, the volume isn't that great to look at, which suggests that probably some of the big players are fobbing off the shares, okay, in a bid to get out of the position. So I wouldn't suggest to go long at this point in time, but I prefer to be more cautious, okay, and a bit conservative on in terms of my position. Any breakdown below this 10,530 points, okay, should actually look at opening another bear position, short position over here, because the long term, you can see the long term support line is over here. So any breakdown below the support line would suggest that we'll have to hang on tight, and that's going to be a roller coaster right down to this support line. Next is the S&P 500. S&P 500 is pretty similar to the Nasdaq in its formation, so not much to discuss here. It will be the same again. Look at the volume over here. There's not a lot of volume with the close above the support line. So over to Europe, which is pretty interesting this week with the resignation, or rather the posting of Elizabeth Truss, the UK Prime Minister. Now, before that, we look at the CAC 40, the French. Now, it attempted to close above the intermediate, besides the trend resistance line, but the crossing is done with very little volume actually. So while the CAC 40 isn't particularly weak, but it is definitely not strong as well. We are seeing some bearish sentiments over here. So if the next week it actually close back down below this support line, then there could be a further continuation of this lower highs bearish momentum. Now over to UK, where there's a lot of story. Okay, the muddling domestic politics creates quite a bit of pessimism in the stock market. Um, even with the PM resignation, there wasn't much clarity, because they have to go through another round of choosing a new PM. So you can see that the financial market is is not exactly celebrating the resignation of Elizabeth Truss, okay, with an uptick with very little volume like the rest of the stock indices. Okay, so over to Asia, uh, we can start by looking at the Shanghai Stock Exchange. Okay, the Shanghai Stock Exchange is bouncing off the long-term support. Now, look at this. Okay, every time it bounces off the support, there's not a lot of volume over here, which is pretty similar. But the we with this hammer in the previous week's uptick, right? Um, we can see that there's a little slight optimism, but I don't think that will be too much. Probably because everybody is waiting for uh, the conclusion of the 20th National Party Congress in China, and everybody is probably hoping for some good news coming out from it to boost the market sentiment. But no, with all the global indices pretty much down, there's not a lot of optimism in my view that there's going to be a big bang and pushes Shanghai Stock Exchange up by a lot. So it's probably going to mother around this region until we see some further signs of big movements. Now, a major stock indices in Asia market is the Nikkei 225. It's been staying close to the long-term support line for a long um, the but over here, but as you can see, you know, as you can see, there's quite a bit of a formation of the head and shoulder pattern going on. So now one way to interpret this is that probably we are going into the formation of the right side of the head and shoulder. So if even if it's bounce off this 25,750 line, okay, it may not be able to cross conclusively above 28,340, okay, which and if it really does so, that means the more or less we can confirm that it is the right side of the head and shoulder. So once the head and shoulder pattern has been formed, then it's a long way down for the Nikkei, which is possible because of the extremely weak Japanese yen. Over to Korea, which is kind of the canary bird for the global economy because it's of its important role uh, in the supply chain besides China. So the Kospi 200 has been hobbling around near this long-term support line over here. So sentiment is still weak due to pessimism amid the weak demand for Korean export for around the world. Okay, so not much that going to be done in the Kospi 200. But what is interesting is closer to home would be the Singapore Straits Time Index. Okay, as you can see over here, the Singapore Straits Times Stock Index has formed a head and shoulder, and it broke down with increased volume. Okay, so this would suggest that no, we would be seeing some pretty bearish momentum, okay, in the next few weeks. Now, if anybody who has shorted the Straits Times Index, okay, the first target is probably around the 2000 7 2700 or 2670 mark. Okay, so if, congratulations for those who have shorted the Straits Times Index. Okay, but do watch out for this. This profit taking potential profit taking point, because as you can see, it also happens to be a support. Okay, the long-term support line. Okay, over here, one of the very strong support line for the Straits Times Index. So that's it for the week of 20, ending 21st October.